Hi, my name is Diane Homan, the Dancing Realtor DFW with One West Real Estate. I'm here today with Meredith Minter from Minter Mortgage, and we're here to have some conversations regarding different things about lending and real estate. So I'm going to ask a few questions here of you, Meredith. Are you ready?
I'm ready.
Pop
Let's
quiz.
go.
Okay.
Let's go.
There are different types of loans available out there. Depending upon the loan, depends on the term, the down payments, and the interest rates. Tell me the difference between FHA, VA, conventional, and non-QM.
Okay.
Do you need a cheat sheet?
I do not.
Here it is. All the little. There we are.
No, I got it. VA loans are specifically for our veterans. My absolute favorite loan on the planet. It's 100% financing, no mortgage insurance. It's an amazing, amazing loan specifically for those that have served our country. FHA loans, interesting thing about FHA is most people will put those in the first-time homebuyer bucket. And while a lot of first-time homebuyers do choose FHA loans because it's 3.5% down, you can get a lot of seller concessions. So that's the seller offering to pay some of the closing costs on the buyer's behalf. It ends up being great for them because they can. It's a really cheap interest rate, makes for a nice small down payment, mortgage payment, and down payment. But it's for everybody, not necessarily just first timers.
Okay, well that's
conventional has a lot of great first time home buyer products within it. These are your general Fannie Freddie loans. It's I would say normally it's the 5, 10, 15, 20%. That's what people generally think it is, but there's a whole lot in between. So much good stuff in there. Non-QM, another bucket full of goodness. It is bank statements. There's DSCR loans for investors, so you actually don't even have to use your own personal income for something like that. Okay. 1099 loans. Lots of really good stuff. So it's anything that's outside of Fannie, Freddie, Ginnie Mae, anything outside of that lane, that VA, FHA conventional.
Right. So if you have a job where you are a 1099 employee or a gig worker or a non-W-2, the non-QM loans would be what you would look for them.
Yes.
Part. Yeah. Okay. So there are price limits to those loans mentioned above. What about luxury homes? Tell me about the loan products for those. The ones that are, 800 jumbo loans. Yeah.
Mm-hmm. Actually, we have an amazing product for jumbo. Okay. Really, really good stuff. They're a lot like conventional loans, honestly. The rates are just a little bit different because the risk is a little bit different for the lender. But there's going to be some things that might be a little bit tighter in terms of qualification, but lots of really great products for those out there. And sometimes you can even get Sometimes you can even get rates that are cheaper on jumbo than you can on your normal basic conventional stuff.
Oh, wow. So we don't expect that you would know which loan you need. That's why I asked her. So she knows all the different loans. So whatever your situation, you just say, help me, which loan do I need? A lot of people don't even know there are different loans. That's why I brought it up. They just think mortgage loan, and that's it. They don't know. Okay, let's talk about interest rates. Oh, dirty word right now. Okay, so what's the difference between buying down your interest rate, like reduction in points, and the 3-1-2-1 buy downs? There's a difference.
Yes, there's a difference. One of them is for the entire term of the loan. One of them is short term. So when you buy down your rate with discount points, the discount points, those are considered prepaid interest. It's a pay a little more now to save more over the term of the loan. The shorter term buy downs, that's for a 1 to 3 year time period. Now, the cool thing about the short term buy downs is if the money that you put into that, which that's a whole other subject that we won't get into today, but you can get some of that money back if you don't end up using it all.
Right.
But so you're talking about short term versus over the entire term of the money of the loan. The short term is going to give you a greater bang for your buck, sort of. Yes, it's more of a subsidized.
Right. So if you're interested and you're worried at all about interest rates, something that we can do is ask for what's called a seller concession to contribute towards either 2 years of a lower interest rate or 3 years. And that's something that we can do to help you with your down payment. Not your down payment, with your monthly payment. So that's why we were talking about that. Okay, so tell me about down payment assistance programs.
Lots of down payment assistance available out there right now. There's down payment assistance programs from 2 to 5% with the state of Texas. Amazing programs. We have one right now that's up to $15,000.
Oh, wow.
On a conventional. So that is a really amazing program. There's all of these little programs that are out there that you just need to ask your lender, what's available, because there's a lot of little things that you could go in and combine. So for people that are not buying because they think that they don't have the assets to be able to do so,
right,
there is money available.
Right.
You're going to have enough money to be able to do some things within the process, the earnest money and things like that we will talk about. But there's a lot of money available out there. So do you have a lot of people ask you about down payment assistance?
I do. Well, actually, no, they don't ask me because they don't know it's available. So I mention it. So when I ask you, what do you have saved towards a home loan? A lot of people will say, well, I just am now starting my down payment, savings. And I'll say, well, let's check first. Let's talk to a lender.
Absolutely.
This is why I always say talk to a lender first, even if you don't think you're going to buy for like a year, because they'll be able to help you out and see if which type of loan, and then if there's down payment assistance available. And then we can explain all these little nuances with the interest rates and buy downs and all that as well. All right. So one thing that I wanted to talk about was equity in a house. A lot of people don't even know what that is. It means it's the difference between when you sell your house and how much you owe on it. So it's basically your profit that you make from the house, your income that you make from this house. And when you roll over when you buy a new house, you can take that money and you can now use that as your down payment towards your closing costs and all that for the new house. But something else that's really awesome about it is you can use it to pay off debt. And I know that comes up a lot when you say, oh, I have too much debt. I want to get rid of this house. I want to buy a new one, but I have all of these loans. I have a student loan. I have this. I'm not going to be approved for a loan. Well, you might be able to, because you could use the equity in your home to pay off those debts to then be able to qualify. And I know that we had a client together that we were able to do that with, pay off some of the debts from the sale of one house to the other, and then they qualified for the new house. So that is another way you can unlock the equity in your house when you sell it. You don't always have to roll it all over, but a lender and a realtor can help you determine which would be the best practice for that. So do you have any comments about that?
I think you kind of nailed it on that it's just, it's somebody that's able to just kind of look at your entire, everything that's going on with you, and take a little bit from here, and like you said, pay off some debts, and maybe get some seller concessions, and maybe get some down payment assistance, and maybe do that. But being able to find the right recipe, but that being a really big one. I do that a lot.
So
take money and pay off debts prior to closing from the sale of their current property.
Yeah, I know. That's so good.
Yeah, a lot.
I think you said the analogy of a recipe. I think that's great. So we're like the chefs, and there's two of us. There's a lender and a realtor, and we work together to create the best recipe for you. So not all situations are going to be the same. They're never the same. Everyone needs different things with mortgages. They're not just one kind, and there's not always the same transaction. So no matter what, we want you to contact your lender first and your realtor at the same time, and ask us any questions you might have so that we can create a nice recipe for you to get into your new house and sell your current one should you have it. So now that I've made that cheesy analogy, do you have anything else? Is that good?
Great, I love it.
Yeah, we're the
cooks.
Custom
made. What's better than custom?
Custom. Yep. All right.
So,
well, thank you so much. I'm Diane with One West Real Estate.
I'm Meredith with Minter Mortgage.
and have a great afternoon.